but appreciate your time, taking off and then joining us for the seminar today. Sorry, the webinar today. And then I'll take a couple of minutes. I won't take too much of time because we have a much larger presentation by Padma Jyoti later on, who would take us do a deep dive on what the compliance thing is all about. I'll take a couple of slides about relativity, what we are, and the years of existence and what we've been successful so far, and then post which we can take it from there. So Relativity is a company which was incepted way back in 2009, and I'm one of the early members of the company. And then one of the things which we always focused at Relativity right from the time when we started, when we hardly had any customers with us, was we have to have passion towards what we do. We need to have the commitment. We need to embrace equality, and then also for the fact that the compliance is a very key thing today, and then and all of you are in that space of providing compliance activities for your respective employees, but then we as a company do it for our customers. So quality, integrity, and excellence for passion is something which we always embraced upon, and then we kind of work towards that. Some of the activities that we do for companies is payroll processing. That's one of our flagship offerings that we've got. We also do carry about payroll auditing as well. We do QETD's compliance, we do statutory compliance, CA and ROC services, and also for the fact that we also do tax compliance and audit. So this is something which we've been doing from the time we started off. And digital form 16 is also another offering that we do, and then we've been doing it for the last 14 years, and we've been successful so far. One of the things that we are all very proud and happy with the fact that not one customer has left us because of non-compliance, or we've not delivered to what we have promised. So we have more than 90% of retention rate of all our customers. So when I started we started in 2009, we hardly had anybody on board. Today we have more than about 150 customers, varying from different segments, different types, different sizes. We have the larger corporates to the smaller companies, and then for us, every company is the same. Doesn't matter how big or small it is, and what's the kind of dollar value that brings us onto the table. So that's one of the things which Relativity always focuses on and will be focusing. So going to the next slide, some of the values that we actually, as I told before, is that we always focus on quality, integrity, and excellence for passion. So when you talk about quality, accuracy is something that we actually focus upon, because we are in the space of providing payroll, quarterly compliance, statutory compliance, and so on. And there is no way where we can deviate in terms of the time and the effort. So we have to be always 100% accurate. So that's something which, hello? Okay, that's something that we actually focus upon: on-time delivery, up-to-date information, and apt advice. So that's one. Since we are the compliance expert, we have to adhere with all of these things. So some of the companies actually look us upon, the updation that we get. The moment we get an update from the governments, we are the first people to kind of get that, and then we actually immediately updated the same with our customers, and even the who are not customers also. And we also advise them on the worker on how we can do things. The second one is integrity, because we are in the space of doing payroll processing, statutory compliance, and integrity and data confidentiality is the utmost priority, because all the data that we have is secure. We have a huge amount of data, very, very, very sensitive data, but we kind of adhere to the data confidentiality, and we also are compliant by that. And also, all of us are passionate about it. We are 100 plus employees, and we look at each of the employees, right from the head of the organization to the executive level. Everybody is passionate about what we actually do. We have an organizational culture, and also our primary focus is customers, because customer is always a king. I mean, that's how we actually treat them. That's why we have a higher retention rate in terms of the customers actually with us. So going to the next slide. These are some of the solutions that we actually care to, not just the larger corporates, but any corporate who actually come to us. We do the complete end-to-end ETDS compliance and audits. We do end-to-end management of payroll lodgement services, Form 16 audit, digitalization and distribution. This is kind of more of an year-end activity. Then we have the PF management and compliance. We have industry. We have actually a portal. One of the good things about Relativity is like not one portion of our services outsourced. In fact, we have a good technology team who actually come up with in-house software products which actually help with our day-to-day services. So ISS portal is one of them, wherein during the year and all your reimbursement, tax proof collection, because you're in February, March, Feb, March, and actually pretty hectic for all of you, because you have your investment proof submission, declaration, and so on. So we have actually an ESS portal which actually built by us so that the customers can actually use of it. We established, build, operate, and transfer, complete India shared payroll services. So it's all completely in-house, and we do GST advisory, compliance, and filing. So this is something which we do for all of our customers. As I said, doesn't really matter which is big or small. So this is something that we do. And going to the next slide, for the mid-sized enterprises, we do end-to-end payroll processing. We do statutory compliance and benefits management. We do complete end-to-end ETDS compliance as well as audit, because this is a very critical piece for a lot of you companies. So ETDS compliance and audits is something which is critical, and then we are actually proud of the fact that we are one of the best in that segment. And we do end-to-end management of payroll lodgement services, as I said before. We do Form 16 audit, digitalization, and distribution, and we process payrolls. We do compliance and the integrity audit. So this is something we do for the mid-sized enterprises. And when we look at the small-sized enterprises, we do payroll processing, which includes the ETDS compliance and statutory benefits management. Because one of the things that we actually realize is it doesn't matter how big or small the companies, certain portion of our offerings remain the same, but then certain portions changes from companies to companies. Like for example, manufacturing companies, the compliance is very different from an IT company, whereas very different from an FMCG or a pharmaceutical kind of companies. But then we kind of have an expertise in all of these segments, and then we kind of adhere to all of the compliance that way. So coming to the smaller companies, we do the payroll processing, we do the advisory and implementation for HR policy, framework, processes, and procedures. Post which we also do the advisory and implementation for finance policy framework and the processes and procedures. And when it comes to India entity and advisory, we do the complete setup of the company. Suppose if anybody wants to set up a company, we do everything from the scratch. So we are pretty good at it. We also do the bookkeeping and accounting for your business, and also the CFO advisory. This is one of the activities that we do for very small companies which doesn't really make sense for them to have a CFO. So we become an external CFO, and then we kind of carry out the entire activities what a CFO actually would do for that particular company. Going to the next slide. So as I said, we are 14 years and counting. We have 155 clients. Yeah, and when it comes to some of the critical data, we do more than 12 lakh transactions per quarter when it comes to QETDS filing, and our accuracy rate is 99.49, and we're all very proud of the fact that we are 99.49 accurate. And this data is actually not done internally. It's actually done by an external audit firm, and then that company has actually come out with the data in terms of the accuracy rates. We are available in 16 cities. We issue more than 4.7 lakhs. In fact, this year we have kind of touched 5 lakhs. And then our client retentionship is 99.98%. I mean, as I said, customers are the key for us. And then we do anything and everything to keep the customer happy and satisfied, because we are in the space of providing payroll, compliance services, ETDS filing, and taxation. So, and we can't afford to, kind of deviate anywhere. That's why our accuracy rates are 99.49. In fact, I would say it's 100%, but me being a salesperson, I can't afford to say that. So I'll go with this figure. So with this, I kind of complete my quota of time. I don't want to take too much of time. So I kind of complete it here. Any questions, you can actually put it on the chat, and then, and we can take it up, or we can take it later. And I also want to wish all the women out here a very happy Women's Day. You people are really great, and they do a lot of services for the company that you're working for and to your families. God bless, and thank you so much. Padmajyoti, over to you, Nivedha.
Thank you, sir. I would like to introduce today's presenter, Mrs. Padmajyoti. She is leading the team of payroll and taxation at Relativity over 13 years now. She is an enthusiastic human being interested in change initiative and diversity at work. It's time to start our webinar. Let's start, and over to you, ma'am.
Thank you, Nivedha, for your great introduction. And good morning, all. I think it's a great morning to everyone, and especially for women, it's a day to celebrate. Happy Women's Day for all the women participants in this webinar. So, as you are aware, this is the year-end closure, and we are in March, and we have to do certain activities for year-end closing. and also there are certain preparedness activities has to be taken care for the next financial year. It's in the next month. So in this webinar, I'm going to tell or discuss certain items. It's just a brush up of your basics so that we can check whether we are aligned with the Income Tax Act and what is mentioned. What are the things that we may missed out in calculating tax components, and these small items that we have to concentrate while closing this year end. So first, I will have a presentation on what is the items that we have to concentrate and what are the most important items only I have covered in the PPT. Once this done, and also I have a budget updates, what and all the changes that we have to do, and we have to be prepared, and we have to actually for the next month we have to implement certain items in this time. So how we can prepare, what are the updates, so that also I have mentioned here. And later on we will have a Q&A session. If you have any questions in mid of the webinar, please put it in the chat box. I will answer to you at the end of the session. Or else you can wait till the session is getting in and you can put it in the chat box. Okay. So first, I'm going to start with the very basic. So what and all things, as you are aware, we have to calculate tax for the salary which has been paid by the employer to the employee. But there is another way, what and all items has to be included in the gross salary. We have to check what and all that we have to include it, and we have to calculate the taxes. Many of people are unaware of this, and some people will aware of certain items. So certain people will not aware of all the items. So I'm just going to tell what is that and what and all things that we have to consider and why it has to be considered. So first thing is, as you are most of the people we know that we have to include the wages. Here the wages means whatever the monetary benefits that I am paying to an employee, that is an allowance or instead of reimbursements, without submitting any bills, I'm getting what and all wages that regularly that we are paying, that has to be considered under the gross salary. And also in certain manufacturing units, there is a pension which is payable. So regularly for the retired people, you will make a pension payments, right? For that pension also, we have to calculate taxes. Even that pension value has to be, that will considered as a gross salary, and we have to calculate the necessary taxes, and the same has to be reported in filing, and we have to issue the Form 16 also for those pensioners. That also we have to do it. And next thing is the gratuity. In some companies, what they will do is they will have a separate gratuity trust to make these kind of payments for the gratuity settlements and all. So in the gratuity trust, we have to file the tax returns. If you have a separate TAN number for that particular trust, we have to file the separate 24Q filing in Q4, and we have to issue the Form 60. In most in certain companies I came to know about it, they will include only if there is a taxable portion in the gratuity. For example, gratuity is exempted up to 20 lakhs. If they are paying more than 20 lakhs to any employee in certain cases, then the taxable portion only they are including and they are reporting to the government. But that is not the right thing to do. Even if we are paying it, if whatever the gratuity that we are paying, that is fully non-taxable, and if it is getting exempted under Section 10, what we have to do is we have to report the income in Section 70, and the same exemption has to be provided under Section 10. This information has to be included in the filing, and the same has to be included in the Form 16. When in the employee filing the returns, they also have to disclose this income. Otherwise, if we missed out this payment, then there will be a from the company, the employee might get additional income, but it's not reported anywhere. So in future, there may be a questions which can be asked by the department to the employee. There isn't this much of amount getting deposited in your account, but it's not reported anywhere. So it's a good practice to include gratuity in a gross salary, and whatever the exemptions that they are getting, that we have to provide it under the Section 10, and we can for this we have to file the tax returns, and we have to give the necessary certificates to the employees. And next thing is non-monetary benefits or perquisites. So if you take in the whole compensation and benefits world, either we will pay it's in a mode of cash, or we will provide certain benefits. Like for example, if we are providing food coupons, or if we are providing free lunch, that is one of the non-monetary benefits. And if we are providing free accommodations or any kind of like this, because if an employee directly using that option, for example, if I'm providing accommodation, free accommodation to one of our board director, means if he is going to outside and he take a home for a rent, and then he has to pay certain rent amount, right? But since he is an MD of a certain organization, we are providing this as a free accommodation. So for that we have to derive certain values, and these are called as a non-monetary benefits. Instead of I'm providing it is in a cash mode, whatever that I have been provided in a kind or any benefit that they are using, that is also has to be taxed, and we have to calculate the taxes appropriately. So in this, if you think the club expenses, whatever the company is doing for the for certain club expenses will be included, and credit card expenses, if you are paying credit cards to some of the board directors or managing director like that, so that is also included as the non-monetary benefits. And if you are providing any personal assistance or driver, or for any household activities, if you are providing any particular persons to them, for example housekeeping and car driver, gardener, so these items everything will be considered as a non-monetary benefits. For each for each everything, there is a valuation methodology is there. Based on that, we have to value it. We have to derive the value, and for that value, the taxes has to be calculated, and we have to deduct necessary taxes on this. In this, it will cover the interest-free loans. Also, the employer contribution more than 7.5 lakhs, and if the employee is getting any stock options benefit. So in that also will be considered as a perquisites. And the next thing is profits in lieu of salary. In under this, if you are providing any commissions or ex gratia, or if they are getting any insurance benefits from the key man, so those things and all, it will be included under the salary. And the next thing is, as per the EPFO Act, employer has to be the maximum contribution by the employer towards PF is 12%. If it is more than 12%, in whatever the percentage value that you are contributing, right? If you are doing more than 12, that will be taxed under the section of 70. That is one thing. In certain companies, for employee also, they will bear it. They will not deduct it from the employee salary. They will employer itself pay both the employer and employee contribution. In those cases, and also whatever the excess contributions that they are made above 12% will be considered as a taxable income. And the same thing to the employer contribution towards NPS. Most of people will know NPS, the corporate NPS, that is in corporate NPS is exempted under section of 80 CCD of 2. It is added in the income, and the same exemption will be provided under the section 80 CCD 2. But by default, we have to include that value in the gross salary, and after deriving the gross salary, we have to give an exemption under the separate section 80 CCD of 2. So we have to include both in income and the deduction part also, it has to be considered. And next one is salary paid in advance. For example, if I am paying an advance salary to any one of an employee, then that will be taxed in the receipt, in which month that has to be taxed in the financial year in which I have received that particular amount. Loan is different, advance is different. Salary advance will be taxed whenever that I am receiving, that has to be taxed, and we have to deduct it as a we have to deduct the TDS. This advance salary, whatever that we have paid, that will be considered under the section 70. So in the section 70, all these items will be covered, and then the taxable reimbursement also we have to include it here. Certain companies will provide mobile data card and fuel expenses and all we will provide, but employees may not submit bills for the whole value. So the value, whatever the employees submit the bills, that is considered as a non-taxable, and for which they haven't submit the bill right, that we have to include it in the gross salary. So this is how we have to derive the salary for that particular financial year. These all items we have to include, and we have to derive the gross salary as per the income tax act. So next item, what we have to check is, okay, this is first income consideration, and second item we have to look on is for whatever exemptions that we have provided in the month of March. We have to there will be a proof for all the exemptions that you have provided. For that, there is a necessary documentations you have to maintain. From the department, they might ask any kind of informations for the next 7 years. It is employer's responsibility to maintain all the proofs. So in case in future, if from the department, they are asking about the rent receipts that the employee submits, that also like this, they might come out with all the proofs, whatever that employee have submitted. If any questions that we received like this, any request have been received from the income tax department, then we have to submit all the proofs. And these kind of our clients have received these kind of notices, like they have been requested to submit the rent receipts or whatever the documentation that they have, that the employee have submitted in the financial year 12, 13 and all. So it's better to ensure whatever exemptions that you are providing, for that there is a supporting document is required. In that supporting documents, please ensure it is aligned with the necessary requirements, because these proofs has to be within the financial year if it is an investments, or and it has to be in an employee name for certain cases, and for certain items we can provide exemptions for the spouse and children also. So based upon the basic whatever the conditions that you have framed to submit the proofs, it has to align with the that guidelines and ensure it is happening. And also please check the tax computations whether it has been computed based on the proof submitted by the employees. You can do it for 1 or 2 employees as a random check, because I know most of the people are using certain softwares or something. Just have a manual check also. That can, if it is not working in the right manner, then you can come to know and you can do the necessary adjustments in the month of March itself. And next thing is rejoinees tax computation. So for a rejoinees, for example, we might consider, we provide us a new ID and we calculate the taxes based upon the current tenure and we will file it. But from the department perspective, this is a PAN number base they will consider. For this individual, what is the whole year income in this particular financial year, whatever the income you have paid, for that you holistically you have to club it, and you have to deduct the necessary taxes, and you have to provide the exemptions based upon the bill submitted by the employees. So in the previous cases, in the previous financial years, we have while we are doing the taxation for our clients and we from the others and all, we came to know this rejoinees and all, most of the time it is not taken care. While filing the returns only we came to know, while we are doing this audit between the file data and the data that we had. So in that only we came to know that these employees, if I'm clubbing the income, then they are getting additional tax liability. So instead avoiding this, please do this manual check for the rejoinees, whether the whole year income, whatever that you have paid, has been considered and the taxes has been calculated. So that is one thing has to do as a mandatory item. And like the same way, we have to do it for the inter-entity transfer cases also. As an employee, I might work in the same group of company, but I doesn't know about whether which entity to which entity I have moved. But for an individual, while they are computing the taxes, there should not be any tax payable will come to rise, right? So if one employee is moving from entity A to entity B, in entity B, please consider the whatever the income that you have paid in entity A as a previous employment income and calculate the taxes necessary so that employee may avoid additional tax payable due to a salary income at the end of the financial year, because they might have other sources of income. For that also they have to pay additional taxes and all, but because of salary there should not be any taxes, and since they are working under the same group of company, this additional check also we can do it. And this is one major item that we have to do it. And next thing about the valuation of non-monetary benefits. The non-monetary benefits, if you see, there are multiple items is going on, multiple items are there, and most of the things are direct valuation. For example, if I am paying a club fees to RMD, then whatever the value that we have paid less whatever that if we have recovered certain amount, that will be considered as a non-monetary benefits. But these four items having a certain computations, and which we have to do it once again at the end of the year. So I am just reiterating these four items: interest free or concession loan, and the next one is stock options, and employer contribution towards retirement fund, and annual accretion for excess contribution towards the retirement fund. For these four items, we have to check is there is a specific methodology has to be done, and we have to validate whether it has been done or not. For example, interest-free loans and all, we have to calculate the interest percentage, whatever the interest that the employee has to pay, that has to be calculated based on the SBI lending interest. For example, if person A who's going and getting a personal loan in outside the bank, he has to pay at least X percentage of the interest. But if in the company, if they are not charging any interest, no, then this X percentage is a non-monetary benefit. He is not going to pay any kind of interest to anyone. So this will be considered as a non-monetary benefit. And whatever as per the SBI rates, what is the standard interest has to be calculated, that we have to calculate it. We have to calculate, and it will be considered under the interest free or concessional loan. In some companies, they will provide it in zero interest, and for certain loans, they will provide it in concessional rate. Either they might give it 6 or 8% like that, they will provide. And the next one is stock options. Why I have mentioned stock options specifically here? No, stock options, the whatever based upon the exercise date and vested date, we have to calculate the perquisite value, and for that for in which the financial year the date is coming, for that we have to consider in that particular financial year, and the taxes has to be calculated. For example, if there was an exercise or the sale has been made by the employee in the end of the March, like 28th March or something, no, for if it is an ESOP, then we have to calculate the perquisites, and it has to be counted in the financial year 22-23 itself. Because if I'm initiating the transactions, if the fund may be transferred to an employee in the first week of April itself, they might receive there may be chances that they will receive in the first week of April, but still based upon the date of exercise, we have to consider this value for the financial year 22-23. So please keep eye on it. If you have a stock options, then if any employees are exercising, or if it is getting vested, for that the valuation has to be done. And the next item is employer contribution. So in the most of the times, we will do it the projection in the year and year starting itself, and we will calculate what is the maximum, if the retirement fund contribution, if it is more than 7.5 lakhs, then we will project in that time itself, and we will calculate the taxes in a regular basis. But to do the recheck in the year end, please recompute once again whether that for who and all it is more than 7.5 lakhs. So how we have to calculate that I have mentioned in the upcoming slides. So here that employer contributions towards retirement fund is, we have to consider three items. One is contribution towards the provident fund. and the second one is contribution towards the superannuation, and third one is contribution towards the national pension scheme. So whatever contributions that you have made to all these three funds has to be summed, and if it is more than 7.5 lakhs per annum, that excess value will be considered as a taxable perquisites. So if I will tell you with a live example. So in this case, if you see that employer contribution and superannuation and NPS contribution all put together, it's coming around the total of 8,833. The exceeding value, it is exceeding more than 7.5 lakh, right? That excess value only we have to consider it as a taxable, and this 50,833 will be added as a taxable perquisites, and it will be included in salary under the gross salary, and we have to calculate the taxes necessary. This item we have to check once again in the year end, because there might be changes in the salary, and if there was a if it is got missed out, then we have to do if we are going to arrest in the filing of returns, then there might be chances for additional tax liability. So before closing this month itself, please have a recheck on this item and ensure whatever the excess contribution that you have made, that has been added as a taxable perquisites. And next item is, as I have mentioned earlier, that whatever the excess contribution. So in the above example, that 50,000 is an excess contribution, right? For that excess contribution, we have to calculate whatever the interest or any kind of returns that employee is getting from that excess contribution also taxable. So for to derive that value, department has come out with a certain formulas. That formulas I have mentioned here. I will explain what is what and how we have to calculate. Okay. Here the TP means taxable perquisites. That is what is the value that I'm going to finally derive as a tax, finally derived as an interest. That is annual accruation for the excess contribution. So PC means the principal contribution. In the above example, the principal contribution is a 50,833, and this principal contribution is particularly for the financial year 22 and 23. For which financial year I'm doing this computation, for that only we will consider as a PC. PC is mentioned as principal contribution for this financial year. And next one is a rate. Rate, they have given a separate example, that separate formula that I will tell you. And next PC1 and TP1 and all, these are the values which is get taxable. These are the taxable perquisites which is calculated till the previous years. For example, certain employees might have already have this contribution is more than 7.5 lakhs in the previous years also. For them we might calculate the tax perquisites in that particular financial year. That value also is getting accumulated, right? So for that also we have to calculate the interest. So PC1 is about the principal contributions which is made to principal contributions made in the previous financial years. That has to be included, and taxable perquisites that is calculated in the previous financial years. How we are going to do it for this financial year, right? This value we have to include as a TP1 in the next financial year. And then return. Return is about income from FAVG, income, whatever the additional income that I have gotten for this particular fund from these funds, that will be considered as a I. And FAJV is, that is the opening balance of that particular fund, and the closing balance of that particular fund average has to be considered as FAVG. Based on this, we have to calculate the returns, and then we have to substitute that value in the above, and we have to derive the taxable perquisites. This taxable perquisites has to be here, that opening balance and closing balance means, for example, if one individual who is having only a PF account and his that employer contribution is more than 7.5 lakhs, in that case, what details we required is that employee's passbook is required. From that passbook, employer has to mention what is the opening balance as on 1st April 2022 and the closing balance as on 31st March 2023. These two values are too important to calculate this returns. So like this, we have to get it for the superannuation and also for the NPS. So this perquisite computation we can able to do only in the month of March, because we have to consider the value as on 31st March in the month of April, because we have to calculate the value as on 31st March. So this activity, this interest computation will be done once the financial year is closed. After that, you have to collect all the proofs from the employees, all the details from the employees, like what is the opening balance and what is the closing balance for that particular financial year, for provident fund and superannuation and for the NPS. And you have to derive this, and you have to derive this taxable perquisites, and the taxable perquisites has to be added in the salary, and for that salary we have to calculate the taxes appropriately. If you have any doubts in this, please put it in the chat box. I will answer your question at the end of the webinar. So next, these are the major items which we have to consider, and we might miss out while closing the year end. So kindly go through these activities, whatever items that I have mentioned, right? Please go through once again before closing the March month payroll and check whether everything is aligned. If it is not aligned, please make the necessary changes in the tool, because still we had most of the people's payroll cycle will be started after 20th, right? So still we have at least 5 to 6 working days. So whatever changes that has to be done, that we can do it. And next thing is, so preparatory activities for Form 16. So even from till now, if we started, then we cannot end up with the last minute pressure. And as you all know, if we are filing the returns in delay, then there might be an issue. Traces will also take their own time to process the returns, because in the month of January, for companies who and all have filed their returns on 31st or 30th, right? For them, the filing regular return itself processed on 10th, 12th only. 12th only they have processed the returns. And as you know, June 15th is the due date to issue the Form 16. So if we are filing it at the last moment, there will be a chances to miss out the statutory deadline for the Form 16. So it's better to prepare along with the year-end closure, and you can complete the returns as earlier as possible, so that you can issue the Form 16 to an employees without any delay, and you can adhere the timelines also. So these are the certain items you have to do it before filing the Q3 returns itself. One will be the master list, to whom and all we have to issue the Form 16, whether they might be outbound or inbound, expats, normal employees, or any type of category employees you might have in the organization. Please include all the employees to whom and all you have to issue it. So based upon this, please ensure whether you have reported those employees in the previous quarter's returns, or if they have missed out, undertake the necessary corrections. And for to whom we have already reported also, some cases, sometimes we will do the retrospective change, right? So because of that, we have to do certain adjustments, or certain values has to be removed. That also, that correction also you can undertake. And I also want to give one update in races from Q2 and all. From Q2, there is no option to do the online corrections. So whatever corrections, if you want to take, you have to do it via offline. So for offline, it is taking approximately 5 to 6 working days to process the returns itself, and they will update in the tool. So it's better to do it as early as possible. And also, you have to keep a track on the latest changes in the Form 16 or the Q4 reporting methodology. Kindly have an eye on it. If we are going to note about the last moment, then it will be very tedious to adhere the necessary timelines. So as of now, there is no changes in the Form 16 template and Q4 reporting items. Whatever we have done till the last year, the same thing is going to be continued for this financial year also. If any changes is going to be updated, if any changes have been implemented or provided by the department, we will update you in the regular webinars which we are going to conduct in the month of April and May. If there are any changes have come, we will update in those webinars. So these are the preparatory activities that we have to do for the Form 16, that is for the year-end completion activity. And also I have the certain budget updates which will have an impact in the payroll tax computations. So from financial year 23-24, as you are aware, till the last year, by default, if a new joinee or whoever comes, we will calculate the tax based upon the old tax regime. But from the financial year 23 and 24, it has been moved to the new tax regime. So by default, if employee doesn't opt any regime, then we have to calculate tax on the new tax regime. If employee wants to opt for old tax regime, then they have to specifically apply. They have to choose it. That the option for choosing it's available, but by default, the taxes will be calculated on the new tax regimes. And you are aware there is a changes in the tax slab in the new tax regime. So earlier it was a 2.5 incremental slab. Now it has been moved to the 3. So 0 to 3 lakhs, there is no tax. 3 to 6.5% like that. They have been changed the tax slabs. And next major thing is in standard deduction. Earlier standard deductions will be allowed only in the old tax regime. In new tax regime, no standard deductions is there. But from this financial year, from the financial year 23 to 24, in new tax regime, the employees who opted for new tax regime, they also can avail the standard deduction of rupees 50,000 under section 16. And there is a one more thing, major thing is rebate limit has been increased from 5 lakhs to 7 lakhs. If you see, if an employee choose a new tax regime, if he had an income until 7.5 lakhs, then he will not have any taxes to be paid. How I am telling about 7.5 lakhs is basic for till 7 lakhs, there is a rebate and there is a standard deduction of 50,000. So if it is, so if both put together, if it is more than employees who are earning up to 7.5 lakhs and they have opted for new tax regime, they might not have any taxes to be deducted. And the another update is maximum surcharge limit has been reduced to 25%. Earlier, the surcharge maximum rate is 37% in new tax regime. Now that has been reduced to 25%. So whatever changes here that I have mentioned, it's specifically to the new tax regime, not for the old tax regime people. Only for the employees who opting for new tax regime, these additional changes have been introduced from the financial year 23-24. That is for the period April 23 to March 24. So please ensure that your payroll system has been updated these kind of changes, and check whether it is working fine or not, because in the next month you have to process the payroll. So ensure these changes have been implemented in the system and it's working fine. And another major update in the budget is, so earlier there was a tax on capital gains. Here I am providing a budget major updates which is related to the individual taxation. I have not included all the updates in this. So earlier, if I am purchasing and selling a property, if I have sold a property, so whatever the gains that I have gotten from that property, right, that I can reinvest in any property and there is no cap at all. So if I'm selling a property, if I get a gain of 20 crore, the same 20 crore I can invest in another residential property and get a tax exemptions. But now this has been capped to 10 crore of rupees. Maximum we can reinvest up to 10 crore to get a tax exemption. You can invest more than that also, but maximum cap provided for tax exemption is 10 crore only. So this is how the presentation is completed. If you have any queries, please put it on the chat box. And also I'm running a poll to understand about the webinars feedback and other stuffs. Please respond to the poll. It is very important for us. Your feedback is so important so that we can make the necessary changes in the upcoming webinars. We have received response from some people. Please provide responses. We are yet to receive a response from others also. If you have any questions, please put it on the chat box. I haven't seen. Okay, I have received a question from Manjunath. Please explain on how the employee having income from businesses and professions should opt the tax regime. So if you have any, okay, for individual who had a salary income, they can opt while in the payroll itself. Based on that, the taxes will be computed. And if you have a business and profession income, while filing your returns, you have to opt for the new tax regime. And you have to, after the, there is a form called Form 10IE for this financial year. Before filing your tax returns, please, if you want to choose new tax regime, please file the Form 10E and then file your tax returns. So based upon these declarations, that tax computations will be done appropriately. If you are going with the old tax regime, then there is no form, there is no form or declaration that you have to provide it. Like the current year, that employee cannot switch back to old regime, while with the employer there's a similar condition. There in FY23. Yes, you are correct. I'm not sure about you. You are correct, Mr. Krishna. Whatever your understanding is right. Once the employee opted for old tax regime, and if he had business income or any other provision income, then there is no option to opt out from the new tax regime to. I cannot change it. I cannot switch also. The same thing will continue for the next financial year. Is it possible to consider HRA for non-working location? Example, we have only one work location, which is in Bangalore. But if an employee share proof for Delhi, which we consider. Rechna, actually, I had one question here. So currently there is an option in the organization have provided the employee can work from the permanent work from home model. If that has been provided to that particular employee, then they can claim the HRA, which is paid for the Delhi location. Otherwise, they should not able to claim it, because house rent allowance have been provided to has been paid to make the necessary expenses which will happen for the house rent, that is for that particular location, that particular work location. If you don't have any specific to that, and if you are having a permanent work from home model, then employee can claim HRA for the other cities also, based upon the city which he is working. Could you provide me tax saving option that I can suggest to my employees? Incorporate in the payroll restructure, can be exclude. This can be excluding HRA, insurance, LTA, food coupons, and investments. Actually, Ashwin, this tax saving options, it's too huge. So in that case, I think we will reach out to you separately from our team, and then we will discuss in detail and what option that you required. Based on that, we will provide the necessary suggestion. Continuation to Regina, the HRA benefit will consider 40% or 50% in HRA calculations. Based upon the which city that you have provided the that employee have been stayed, right? For example, in that case, they have shared the proof for the Delhi locations. Delhi will comes under the metro city, so maximum 50% of 50% of basic will be considered as an exemption. If you still have any questions, please put it on the chat box. Still, we have 5 more minutes. Uh, and also we have our YouTube channels. I think Niveta have already shared the links to you. So please subscribe to that, and you can able to get the latest updates and whatever the blogs and all, you can able to receive it. Can we expect a complete webinar on budget changes? Yes, Mr. Krishna, you can. We will have that as in our pipeline. So this may be happen in the month of April, first week something. Our team will provide an essay update to you on this. Whether we considered LTA for tax exemption without bills, uh, for whatever exemptions that you are providing to an employee, Gokilavani, you have to maintain the necessary bills. In future, from income tax department, if they ask for the necessary proofs, then you have to submit it. It's better to collect whatever exemptions that you are providing. It's better to have a supporting documents. So based on that, provide an exemption. Okay, if you don't have any questions, I think we can close our webinar. Thank you for your active participations. Please support us in the upcoming webinars also. We will have this regular webinars on every month, second Wednesday. We are having these kind of webinars, which is related to the monthly updates, or it may be also about the specific topic, which is related to payroll, compliance, and finance. From Ashwin, for LTV, the maximum consideration will be only for the first class train fare to that location. Or okay, in LTA, there are multiple options that employee can use the travel mode. For example, if they are using the road transport, or they might have a flight also, they can use it, and they can use the first class railway ticket to train also, they can travel it. If they are using via their own vehicle, or they are taking the tours and travels, they are going in a taxi. In that case, for that we don't know about the exact billing value, right? In that particular case only, based upon the kilometers, we will cross validate with the first class train ticket, and we will consider it. For the per kilometer, what is the charge and how many employees have been traveled, based on that the exemptions will be provided. Other than that, if the employees traveled on flight or bus, whatever the traveling charge to that location will be considered it. There is no option in that. There is for example, if in flight I'm getting more than 15,000 as a bill, then we will consider the same. In LTA, rules speak about only leave to be applied. Can we upgrade the rule to employee during the? Can we upgrade the rule that employee have to be on leave during the complete LTA period and specific on LTA? Okay, in LTA, the rule have been spoken about the employee has to take a leave, but it has not mentioned anything that they have to take an earned leave or something like that. If they have taken the leave for the whole period, for example, certain people will travel for the 10 days and all, 10 or 5 days something, but the organization might be in a leave for 3 days. So it is not necessary that employee has the whole travel period should be on a leave, that employee. At least one day, if they have taken a leave in that traveling period, then he is eligible to claim the LTA. would be great if you could add more information about the old and new tax regime in the next webinars, which will I get scheduled for the future. Okay, in the Lindsay John, we have taken your point. I will suggest the same to my internal team. So based on the topics, we will let you know whether it is going to be included in the next webinar and how much time we are going to spend. Thank you for your suggestion, actually. I think we have already crossed 1 minute, and if there are no questions or queries, then we can close the webinar. Thank you. Thank you for active participation. Thank you all.